Good afternoon. Today is Wednesday, the 23rd of January, 2007. This is Brian Shannon from alphatrends.net, and we had some real buying here today with some nice volume. So we're finally starting to see some signs of buyers back in this market. Yesterday we saw some big volatility. The market closed near the highs, but the Apple news wasn't enough to get these markets, keep them down. At least the S&P 500 finished with a gain of just about 2% with its gain of $2.72. We'll see in a minute that just the Qs were down really of the major indices. But we saw some nice volume here as the SPY has bounced here today. And it's the first encouraging signs that we've seen in this market, all year pretty much. If you look at the 10-minute time frame, you see that we broke this downtrend line. We also got past that level of resistance I thought would be important yesterday, which was $132. And what I'd like to see now, because we do still see this declining 5-day moving average, I'd love to see a pullback maybe towards that 132 level and then a move higher. But right now, today's volume and trading activity was encouraging. It does remain, though, in an overall downtrending market. So continue to be suspicious of all rallies. They try to make these rallies look fantastic on the upside in a bear market, but we still have to be aware that the primary trend is still lower, and there's likely to be a lot of levels of resistance ahead, and that sometime these lows will probably be retested here over the next month or so. For now, we'll see how long this strength can hold. But looking at the 1-minute time frame, you see here that the market gap down started out a little bit strong, kind of a little doubtful in here. But when it found support above that daily VWAP here late in the afternoon, that's where the real rally began. In the last 45 minutes, hour and 15 minutes of the day or so. And you can see here that it also recaptured where the real strength really occurred was after it recaptured the 2-day VWAP. This is the average price over the last 2 days for the spiders. So it's absorbed that 75 basis point discount rate cut, and looks like now the buyers are back in control for at least the short term. And Ben Bernanke's probably breathing a lot easier right now. So we look at, let's take a look at the semiconductors. They did finish with a gain as well. The key level of resistance for this market continues to be up near $365. You can see that we did make lower lows in here today and bounced quite strongly in here. I think that if it was to come back as low as 345, we would still be in decent shape for a continued bounce in here. But once again, I'm going to point to this daily time frame and say that there's nothing bullish about this chart whatsoever. So if you're trading, make sure they're trades. Don't confuse the short-term trends for the more powerful dominant trends here on the larger time frames. So the IWM actually has been the one group, one area of the market that has been showing a little bit more relative strength than the rest of the markets. And you can see here that this market actually closed with a 3.3% gain today. It closed $2.19 higher. It is up to a level where we might have the potential for this resistance up near that $69 level that we first identified yesterday as an area that was likely to act as resistance. It's in that general area. Don't take the numbers so literally. But in here we see that we saw some prior support in here. That's where it broke down from that descending triangle, hit its objective near $65, and now we're bouncing back up to that level where prior level of support once broken tends to act as resistance as the people who bought back here start to breathe a little bit easier and think that maybe they ought to reduce their risk a little bit and take some money off the table. That supply halts the trend here. And really, again, looking at the 10-minute time frame, what I'd like to see here would be a pullback maybe towards that 67.5 or so level down near the 5-day moving average, and then a continued rally. But again, late day, we had some real big volume in here, and the buyers took back control of this market for the short term. This is, again, the 2-day VWAP. Once it broke above that, That little level that that acted as resistance here then became support, and then it was off to the races right up to the close. The one area that closed down on the day was the NASDAQ 100. The Qs finished with a loss of 16 cents. But again, you can see this big volume down here. Big volume without further downside equals accumulation. And when the market can absorb a huge loss from one of its leaders, as it did with Apple today, then it really paves the way for a more significant bounce, maybe up towards that 46 level. Of course, this level here, I think that was 45.16 or 45.13. Let's take a look. The August lows will be important. Getting back above this 44.39 actually will be a good sign that maybe it can bounce a little bit further. Who knows? Maybe this market can get all the way up to that 50 and 200-day moving average up near about $49. It would be a big rally from here. Would still have the market down significantly for the year, but the signs are in place that maybe we're starting to see some evidence that the buyers can sustain a little bit further here. You see that the downtrend line is still intact on the 10-minute time frame, and we've got multiple levels that should act as resistance for this market. So the NASDAQ 100 continues to be the weakest right now, and it's being dragged down, of course, by stocks like Apple and Google. But even those stocks, they've gotten really oversold in here. Apple bounced, more than $12 off its lows or so. Still finished lower, but Google also finished at $25, $30 off its lows. And maybe they're going to recapture these 200-day moving averages. There's Google, and on Apple, that would be back up towards this 145 level or so. These stocks are broken. The momentum is gone. Stocks heal. Need time to heal. They correct either through price, as we've seen, and then they need time. So it's not a clear signal to be a buyer in here. I still believe that the best trades are day trades, and it's just a fantastic opportunity with all this volatility, but you have to be trading on the shorter term time frames. You can't make your decisions for short-term trades based on what you see on a daily time frame. It doesn't make any sense at all. You have to drill down to the 5-minute time frame, the 2-minute, the 1-minute time frame, and look for evidence where those buyers are gaining control. Put your stops in and honor those stops.